Good afternoon, everyone. Hey, this is Scott Henderson, Shooter, and we are going to go over some of our charts this week. Of course, at the end of our presentation, please do review our disclosure. Now, first, as I'm sure some of you noticed, we've had some changes. And to be very candid, that has been because of an identified conflict of interest between Blue Mound Holdings and what all of the services are happening here at Fundamental Trends. So some things are being tweaked for that reason. All right. So basically, I'm moving to my own home simply because swing trading and intraday trading is a conflict of interest. So at that point, so we're sort of creating some separate silos to sort of break that apart. Now, there's going to be a couple things that stay public that I'm going to do. I'm going to do my weekly SPY or my market recap like I was doing in Fundamental Trends, but it'll be here on Substack, which is under swingtradenotes.substack.com. You can go there. I showed that at the beginning of our little chat here. Now, of course, feel free to go there because for the time being, everything's being shipped freely. There's no charge. And to be very candid, I haven't decided exactly how I want to do that yet, but make sure you follow and subscribe because at some point I won't be in the public chat anymore in Fundamental Trends. It'll be completely separate. So that won't happen until January 1st. So make sure you follow me here as well as on X, and we'll get to that. All right. So jumping right into our major markets kind of look today, we're going to start off and go over QQQ at the moment. Really, the look hasn't changed. I still think we build this stuff. And actually, I think we're here the majority of 2026, to be very candid. So now just to double check, you guys can see my chart. Make sure I shared it with you. Perfect. So, I think we're going to get broader here. So I think it just keeps popping out here until we build up, we get a high, and then we get a decent flush at some point. But I think this shelf holds because we've already had really two solid tests of it. And the third one we tried, and buyers came in and took us out of there. So I don't see that change. Looking at the SPY, similar look, but the breadth has been steeper on the NASDAQ than it has been on the S&P 500. And that's because the differential of banks and industrials that are in the S&P 500 versus we're almost all tech in the NASDAQ, which is one reason perks like QQQs over anything else, because that's where a majority of our growth has been. So, but I see a similar look, but I also see a possibility that we're going to have a much deeper drawdown here because we haven't extended enough. It's kind of rolly. And we really haven't gotten a back test anywhere in here that's substantial. The longer that holds out, like we can just look at this rolling process that we had all the way up here, from late 2024, got up here, just put in one additional higher high, and then we dumped. Although, a nice move, basically gave up, not quite 50%, but it was a clean, 25% anyways, 30% of what the wave was, so what we pulled back, came back right to the 618, dead. I mean, perfect. As far as symmetry, when you're looking at Elliott Wave, that's the perfect thing you see because what it tells you is that, hey, we're following the thesis of buyers and sellers, and we have a good idea of being able to predict where they might go. So that's the thought. Let's jump over to some of the names you guys requested. We're just going to basically cover those today. Now, looking at ON Semiconductor, still right here in this zone, this flat right across here is where we are. We're digesting this whole band. We came back and tested. We got our overshoot here, from this low. It was kind of good. We whipped off there, and we've come back and put in another higher low, and now we're testing that higher low. I would think that this is flushing drive 1, flushing drive 2, and then we get a flushing drive 3 right at the base of this around 42, and then it keeps going maybe. So, of course, mind your position size and how you're scaling in with that, but I don't see it's done anything wrong. I'm a little shallower on my cap. I realize this impulse up to, roughly $94 is wave 1. So, we're looking at this kind of impulse leg potentially. Once we get up and out of this, first we've got to clear this $80 and then we've got to clear this 110 and then we should continue back up to all-time high is my thinking. So now let's take a look at Rocket Labs. Now I got a nice pop and it's already started to give it back off of that news that they had a bunch of orders sitting there. And, whenever you have a developing trend, and this falls under the space as a service space, so to speak, ultimately, sometimes that takes time, like RNA editing, for example, with CRISPR. All right. The reason I like CRISPR still is because they have first market preference as far as how they entered the market, and that's not going to change. So they've got some arrangements that other people don't have. And because of those relationships, the newer startups might not necessarily pull those businesses away as long as they've taken good care of. Same scenario with Rocket Labs as that business continues to build. But there's a possibility this gets really euphoric. I have a very conservative look on my retrace from 3, but I do see clear peaking drive 1, peaking drive 2, and then we should get a peaking drive 3. Now, I think it's a little broader. If we take out this, I might have to change my mind, say we're going to roll over, but I don't think so. I think it held up pretty well. I would have liked it to hold price better after that news of having all those orders in place. But at this point, it's done nothing wrong. All right, let's take a look at TerraWolf. This is just a huge candle. It's out of the ordinary of this tape. We really haven't had a candle like that except for way the heck back here. And that was followed up with a heck of a retrace. So this leg, we want to be conscious of that. So in that scenario, just looking back at this, we take out the shelf right here. If you're long, I probably would be trimmed. That's, just sort of my thought. And the main reason is because if it takes that out, it's going back to 50%, it's going back to $6. And you don't want to really hold, $4 a heat on an $11 or $12 stock kind of thing. So that's kind of my thought. All right, let's jump to Microsoft. Now, I have a problem with this gap. I'm going to come down to the daily on this one. I really, when things don't look right, there's a reason why, and that's just because I've looked at so many chart points, and when you have such a huge gap, and I'm not even recalling exactly what that was, but roughly it was a $30 gap in price, which is, a nice move to the upside. And we've never back tested. Not here, no back tests here. None. Now, we did back test this one. It held. We came back up. We tried for new highs and failed. So, my thought would be is that this is an ABC structure or maybe an ABC structure, which would be just a little bit different as far as the look. So, in that scenario, this would be what an XABC might do. And then we still should reject a little bit beyond there and build out that flat. But basically, it's the same look. It just has an extra leg before the impulse curve as far as that look. All right, let's jump over to IONQ. I really done nothing wrong. What I don't like here is we have sell side of the balance rate pretty significant off of this point. It tested it and back tested it. And we broke out above it. We came back into it. And then we raised up just a little bit. So, we're going to have a lot of sellers on the way back up right here around $73, just because this is huge resistance, right? It's huge. So I don't think it's done anything wrong. However, this shelf is getting close and that needs to hold. So right at that 48.93, I'd be conscious of that. There's been a lot of buzz about a banking crisis again. It keeps reemerging that, because of the bailout shelf the government has, is when they start drawing billions of dollars off of that more than what their average is. There's some people that watch that like a hawk and it raises a red flag. So, we want to be cautious on names that are fading with that environment in the banking crisis. So we want to make sure we manage our risk. And I'm not sure exactly how you use a stop structure, but I typically mentor where I like an 821 EMA or like using the Vidya 2 strategy because it gives you, whenever you get to cross, it's a clean place for you to take profits. In this scenario, when this shelf didn't hold from this breakout after we back test, once we took out this shelf, right, and we came below that shelf, that's where our first trim should have been tech. Then when we came down and tested the floor of this particular flag at 65, that's where our second trim should have. Once we pierced this candle, it should have been your third trend. And actually, you should have been out. That's, at least the way that I trade stocks as far as stops are concerned. Now, Kirk doesn't run any stops whatsoever on his position trades. And, I find that challenging because I like to manage my risk. I'm a micromanager there. And that's what I like to coach and mentor because I personally think it's the most prudent way that works for me. So obviously, I want to encourage that with other people. But once this takes off out of, I think we have a shot to run back up towards all-time highs, take that out. But I do think we hit some solid resistance at that 7 foot. All right. QBPS, D-Web. I think it's got a lot more upside than this, to be honest with you. The challenging part is what's this? Because you got clear 3 peaking drives. Now, the challenging part with 3 peaking drives after this kind of consolidation is you have no symmetry for one pattern or other. It's not a ending diagonal or a leading diagonal because this is our longest wave. So wave 1 in that scenario, so you can't say it's a leading diagonal. And we're shallow as heck up here, so we can't say it's an ending dive. So chances are we're building out a new trend. Now, since we have 3 peaking drives into that new trend, quite often those continue into 5, 7, and 8 in that range. So you can get an extended trend up. Now, typically, that's either a wave 3 or a wave 1. They're not usually wave 5. So we could end up with a much more elongated wave 3 here, maybe up to 230. And that's sort of my thought. But again, I don't think this has done anything wrong. Buyers will show up again on any dip into this box right here. So this is where the buyers show up right here. Then a little below there, there'll be another one maybe down here in this range. And what I'm doing when I'm putting, so you guys know, I'm using buy-side imbalance, not supply and demand zone. And reason why I'm looking for those large boot orders that come in and just pop the tick. So I'm specifically looking for that as a method to identify where the buyers and sellers are going to step in. When I say that, I mean the institution, because the reality is they control this market. They always have. They've got the big pockets. They jump to $50 million orders. And honestly, retail just doesn't have that big of a book. So even though they do move the tape, it's not the same as sell-side or buy-side imbalance or supply and demand zones. As a matter of fact, I find supply and demand zones a little noisy. So that's one thing that I want to make sure I express on how I look at that. So, I don't think this has done anything wrong. If you don't have a position on, would not be a bad time to scale around 17.50, 18 bucks. All right, EWZ. I'm looking at, maybe 39 bucks as a wave 3 target. Shallow back test, then we should continue. Now, again, this whole leg is wave 1 of a much larger cycle. So once we get the back test off of this 5, then we should head, really to the moon. So Brazil has a lot of upside, and the way it's come off of the floor is real trendy looking. And notice how we sort of had peaking drive 1, peaking drive 2, peaking drive 3. So we have a clear trend here. So I would expect for us, this is probably 4. We probably get a 5. And then we see whether or not we get a 6, 7, and an 8. 3 extends, and then we get our back test. But that's kind of my look. All right, now circle. Caution, real caution. This looks to me like it could be a complete overshoot of the initial price where we opened at 63.81 roughly and change. So I'm measuring where we could overshoot to 46 bucks. Right now it's a high risk to hold this down to 63 bucks. That's my 2 cents. So that's the challenging part. Looking at ENDX. Now, we're heading back to the floor. Whether we actually get a full flush back to the base of that band, we'll see, but we clearly are caving continuation here. So I would think we get at least back down to the shelf 75. I don't really get interested. I don't like this kind of tape. It's too freaking noisy, and it's just, you don't have enough of a range for me. Where I would interest at all, if it holds, is down here. Buyers will definitely show up right here at about 629. That's my 2 cents here at this point. All right, looking at UUU, I think it's built out this shelf where we're going to hold. Again, this is back to the emerging trend. Nuclear power plants aren't built out in 3 seconds flat. So though there may, the perception that there'll be this great demand in 2025 or 2026, the reality is that demand's not probably coming out until 2028. It doesn't mean it doesn't move because completely oversold, versus the history of price. Notice how far we were, way the heck down here at $3. So, the reality is this tape has plenty of room to recover because ultimately once this 5 gets put in and we get our back test again, right back probably right where we are, then we're going to put another whole impulse leg. So I would say this is probably a D stock to hold longer term once it gets that back test. And that's sort of my thought on that. Now, services, I think we're coming back to this buy-side imbalance around 714. I don't think this holds. Reason there's nothing there. This wick is all we have. Then we have a little more support down here. However, this, you look at the MACD rolling over here, that's sort of a peak, another peak. And so we should get a third peak in MACD right down here. And if you look at the groupings on the RSI, you have like peaking drive 1 here, peaking drive 2, peaking drive 3. You get those on corrective legs the same way you get them on impulse. So my thinking is that we got a shot to pull back to that 710 at this point. All right, looking at 5, flat to risk, it's done nothing wrong. It's working to get back out of this hole. It's cleared it. That 27.66. Our 3 should come in around $31. Again, this is going to be a name that I'm going to say caution with any market weakness. We get any kind of banking news that we do have a financial crisis in the bank, we're going to come down 10 points. We might come down 15. So it is very challenging holding anything besides tech right here for me. I like Google still. I think Google has a horrendous amount of upside. In fact, I think it doubles from where it's at over time, just because the Claude version is spectacular of AI. Absolutely fantastic. The pricing's a little steep because you to do just about anything. $200 to $500 a month, do anything with it, but it's still so superior to what else is out there. It's not even fun, especially when it comes down to programming and planning and things in those areas. It is the logic solid. I mean, you can tell they put a heck of a lot of work into that large language model. So that's my thought on TFE. Looking at premium resources, again, this is another name. I understand why we like it, and I understand that oil is probably oversold, especially if that AI demand truly manifests. Because realize we're seeing this CapEx issue right now, where the revenues aren't as high as they would like them to be for the circumstances that we're in. So that, of course, makes it challenging. So I think there's a greater chance, still see a little bit of a recession. And on top of this, I see it as a impulse leg down because it really doesn't look anywhere near like an ABC at this point. Now, granted, we take out what is trend resistance, you draw your trend resistance line, then I have to change my mind. But it's we got a trend line right up here. So roughly we have to take out the 1340 for me really to get bullish. Otherwise, my bias is that we're going to back test. That's just my thought. Now looking at sound, a little heavy here. Now this is a name that I like long term because of the likelihood that it excels as far as AI. However, right now we are rejecting price with a lower high. And we've taken out the top side of that shelf and this shelf that we sort of built on the way up where we back tested it with resistance. We're below that. So that takes us back down to our next shelf, which is right down here in this area, roughly at about 992. So my thinking is it pulls back. Okay, so that's just where my thought is. Appreciate you guys joining me. We'll call it a day. Great trading. Until next time.